Hello and a warm welcome to all. Today we're going to talk about cash basis financial statements versus accrual basis financial statements. So let's get straight to it. I'm going to use the same company in my very first demo, my 5 cents. If you all recall, y'all that have been with me over time, the owner is Bob Kunamuna. Okay, but we're going to use a different set of indexes this time for our presentation. Okay, so Bob comes to you as the accountant, and he wants you to prepare a set of cash basis financial statements for him. This is what he has going on. Okay, Bob has paid his operating expenses with his credit card, and Bob has $10,000 of revenue outstanding. He's still waiting on it, waiting to collect on it. Bob wants a cash basis balance sheet and income statement. Okay, no problem. So we didn't get any sales. As he said before, he had $10,000. He has $10,000 outstanding. So there's no cash sales coming in. So that's zero. But he also paid his operating expenses with his credit card. And there's an argument out there among accounting experts in the accounting world that credit card payments are allowed or are treated as cash payments when it comes to cash basis income statement. Okay, let's see. So I said before, he paid $5,000 in operating expenses with his credit card, as we see here. We enter those in on the income statement. Okay, that gives him a net loss of $5,000. Okay, we move on to the statement of owner's equity, cash basis. It's pretty straightforward. So $5,000, negative $5,000 is going to go in his equity section. Okay. Then we move on to the balance sheet. You didn't get any cash, so the cash is zero. Total assets equals zero. Okay. His credit card payable. Remember, he charged $5,000 to the American Express or to his credit card. And it's an American Express credit card. So if we're going to charge $5,000 in expenses and book it to prepare his income statement, so these are debited $5,000, and we must credit it somewhere. So we credit it here. The credit card payable, American Express, $5,000. Okay. Now we just did the statement of retained earnings, statement of owner's equity. And we saw that worked out to be negative $5,000, which goes to the equity section or the capital section of the balance sheet. And here it is. Okay. You foot this side, liabilities and capital side of the balance sheet, and that works out to be zero. Okay. So it did. It worked out. So this is the cash basis balance sheet, cash basis statement of owner's equity, cash basis income statement. Okay. Now let's look at this a little bit closer. Everything balances, everything ties in. Okay. But is it right? Is it correct? Is this actually cash basis balance sheet, cash basis income statement? Okay. Well, let's look at accrual basis and see what accrual basis would look like to find out that answer. So here we go with the same set of indexes. Okay. Bob paid his operating expenses with credit card. Bob has $10,000 of revenues outstanding, waiting on to be collected. Bob wants an accrual basis balance sheet and income statement So this time we're going to book that $10,000 of revenue outstanding as sales. Okay. And we're going to book all $5,000 of operating expenses he charged to his credit card as well. But this time he has a net income of $5,000. Let's see if we could keep going and just keep all this in balance. Okay. Statement of owner's equity, accrual basis. Here it is, the net income for $5,000 ends up with the $5,000 capital. That's going to be on the capital side of the balance sheet. Okay, it's going to move over to the balance sheet in that section. So we go over. All right, this time we have $10,000 of accounts receivable. Okay, so remember here we had $10,000 of sales. So if we're going to credit sales for $10,000, what are we going to debit? Okay, we're going to debit the accounts receivable for $10,000. That's money owed to him. Okay, that's strictly in line with accrual basis accounting, GAAP accounting. No problem. Okay. Then here we are on the liabilities side of the balance sheet. Oh, this is the same $5,000 as before, as what the cash basis balance sheet. Okay, that's already a flag, but let's keep going. Here we are in retained earnings. Okay, retained earnings $5,000. The capital brought forward or rolled over from the statement of owner's equity, $5,000. Okay, rolls over to the capital section of the balance sheet. Flip that side of the balance sheet, liabilities and capital section, and we have $10,000. Again, balances, right? And we know that's right, though. This is accrual accounting. We know this is correct. There's no doubt about this one. This is accrual accounting. Okay? But what about this? What about this guy here? Over here. Is this right? Is this right? Is this cash basis balance sheet? And actually a cash basis income statement. Alright, so here we are. Let's go back where we left off over here in the accrual side. Okay, so we have the accrual basis net income. Let's prepare a statement of cash flow to find out our answer to the question that we had about whether the cash basis of net income is correct or not. The cash basis income statement. So we have net income at $5,000. We have an increase in accounts receivable of $10,000. We need to subtract that from net income because we're turning, our attempt is to convert accrual basis net income into cash basis net income when we do a statement of cash flows. That's what we're doing. Okay? So we start, like I said, with $5,000. The increase in AR for $10,000, we're gonna subtract. We didn't have money coming in for that sale that went into net income. So we have to take that out from net income if we're going to make it cash basis. So we're subtracting it. Okay. The increase in accounts payable, the $5,000 of expenses, that's also a factor or a portion of what makes up net income. This $5,000 net income, it's in there. Okay. That $5,000 net expenses that's in there, that's not cash paid expenses that's in there. Okay. So that was entered in. Now, while that was in there and deducted from income, those expenses are deducted from income, okay? We have to add those expenses back. So we add the increase in accounts payable back to net income because it is not actual cash monies paid, not actual cash expenses paid. Okay, in this we're attempting to report, capture, summarize only cash transactions, cash activities. So again, we're adding that back in. Okay, so doing that, we end up with net cash from operating activities, 0. Okay, we know that's right. That's correct as well. This is GAAP. This is accrual basis. Okay, methods and rules. Okay, statement of financial accounting standards, number 95. I want to say the wrong number. Find that exact number for you that lays this out, which is the authoritative guidance that states how this is done, lay out the rules of how this is done, accrual basis. Okay, so cash basis net income is 0. Okay, so if this is cash basis net income, 0, then what is this? Well, we said this was cash basis net income. Then what is this then? Okay, so in my opinion, what I think, this is tax basis income statement. Yes, you're allowed tax basis, tax rules. Credit card charges, expenses are counted as paid, as cash paid, and can be deducted as cash deductions, as deductions for income tax purposes. Okay, for tax purposes. Individual tax, individual business tax returns, these are allowed. This is tax basis income statement. Okay. So this ended up taking a twist and a turn, but that was that's about it for our discussion today. Cash basis income statements, or cash basis versus accrual basis. So Bob, what I have to understand, Bob, you want cash basis financial statements under these circumstances? Bob, there are no financial statements that I can issue. No cash basis financial statements I can issue for you, or I could work up for you under these circumstances. Okay. Yeah, I could do tax basis financial statements. Okay. So credit card charges do not go on the financial statements until they are paid. It's cash basis. I should say credit card charges do not go on cash basis financial statements until they are paid. Okay. And that actually makes it a lot tougher to try to track and capture and keep it a cash basis statement for a client. So that's why, again, I promote and I recommend accrual accounting. You might think cash basis is straightforward, simple, easy, quicker. Accrual is quicker, easier in the end. And staying truly capturing what's happening with the financial transactions of a business. I will revisit this again using a different account, a different example on the next go around. Thanks for watching. Please subscribe to Sands Virtual Enterprise on YouTube. Please visit my website at SVE, that's for Sands Virtual Enterprise, SVE-accountingandtaxes.com. And also you can participate in the topic discussions that's on my homepage at the bottom of the screen. Please follow me on Twitter, Facebook, and the rest of social media that I'm on out there. Thanks for watching again. Please subscribe. Till next time, forward, SVE.